You're an agribusiness executive navigating an increasingly competitive market while trying to grow your company. Mergers and acquisitions are pitched as an accelerant to growth, but many M&A deals destroy more value than they create. Welcome to the Pacesetter Pod, where we explore and reveal the perspectives, insights, and approaches for successful mergers and acquisitions. Here's your host, the Integration Pacesetter, Joe Mosher.
Hello and welcome to another episode of the Pacesetter Pod. I'm your host, Joe Mosher, and as always, thank you for choosing to spend your time with us today. Today, we're going to be talking to Corey Geiger, lead economist for dairy production and processing in CoBank's Knowledge Exchange Research Division. The dairy segment, the dairy industry, is something that is incredibly interesting to me, and I will confess up front, it's an area, it's a blind spot for me, and something I try very hard to learn more about, to follow, to pull apart, and to dissect. And I find that the more time I spend trying to analyze and follow it, the more confused I get, which is one of the reasons I wanted to have Corey on the show. And it's a great interview, and it's going to really, one, highlight that complexity that I have experienced, but also help cut through the noise and provide some through lines of what are the things we should actually be thinking about and focusing on. So what I mean when I say it's confusing, there's so many competing headlines. You know, you have the impact of China's economy slowing down and their imports of U.S. milk production and dairy products trailing with it. On the flip side, we hear about the potential for herd contraction in the EU due to climate change policies. We have, dairy replacements have hit their lowest levels in 30 years in the United States, which is a big impact into the competitive dynamics of the space. But then we also have record new dairy product manufacturing capacity coming online over the next couple of years. Billions of dollars of new infrastructure and supplying massive amounts of new cheddar, mozzarella, and other types of cheese products and other dairy products to the U.S. It's a lot to try to make sense of. And Corey will help us not just bring these headlines into focus, but he also helps put them into context. And he's going to help those of you who are operating ag supply chain companies think about the opportunities that all these different competitive dynamics, changes, and trends could create for you. It's a great conversation that I'm really excited to share. Before we jump over to the discussion, a little bit more about Corey. Prior to joining CoBank's Knowledge Exchange, he was the managing editor at Hoard's Dairyman magazine, and there he oversaw the editorial team and its 4 foreign language editions. Interestingly, in that role, he was just the 7th lead editor since Hoard's Dairyman began publishing in 1885. As you're going to hear, Corey has deep dairy knowledge ranging from policymaking, international trade, federal milk marketing orders, really runs the gamut. He was the 65th president of Holstein Association USA. He serves on the board of directors for the World Dairy Expo. He's a 2-time published author. He still manages and owns a portion of the 6th generation family farm in Wisconsin. And somehow, despite all that, he still has a chance finds the time to join podcasts and publish papers in his day job. So great interview. Excited to share with you. And with that, let's get to the interview. Corey, it's great to see you today. Thank you for spending some time with us, and welcome to the Pacesetter Pod.
Joe, I'm delighted to be here with you and the audience.
Yeah, it's fantastic. It's a real coup for us, and I know you have a lot of stuff we're going to be covering today, so we're going to jump right in. So today, obviously, we want to talk a lot about the dairy sector and dairy industry, and a lot of the trends and competitive factors and things that people need to be thinking about. But to get us started, I think it behooves us to just start by talking about the state of the U.S. dairy market and the dairy complex. And so with that sort of broad tee up, what are you looking at? How would you summarize the health and the state of the U.S. dairy industry today?
When I talk to people about U.S. dairy, the biggest single one-liner is dairy is dynamic and growing. Now, when you look at that, what does that mean? One of the biggest bellwethers is dairy is a $64 billion category in grocery stores and retail chains. It's even larger than the entire alcohol category when you think about beer and spirits and wine. So there's a big reason that a lot of the dairy case is positioned toward you got to walk through the entire store to get to it because consumers buy dairy products. And obviously how those dairy products look has evolved a lot over time. And we can talk a little bit about that a little later, Joe. The other thing that I talk about, especially when I talk to livestock groups, people that raise hogs or people that raise poultry or certainly beef, is that when you look at the U.S. dairy industry, you have to look at it differently in growth. So compared to 25 years ago, there's the same number of dairy cows here roughly in the United States at 9 to 9.4 million cows. However, milk production has grown a remarkable 45% since 1997 in the last 25 years. So a lot of different moving parts to dairy, and that's why I say that dairy is dynamic and growing.
What are you seeing that's remarkable that we've had relatively stable headline numbers on dairy herd size, and yet the production has gone up? But what are you seeing? What's driving those efficiency gains and that productive capacity? And do you see upside? Do you see room for the herd size to actually expand over time? Are we right-sized to meet the demand that exists today?
Well, we're right-sized to meet the demand that exists today in terms of cow numbers. But when you think about that, same number of cows, 45% more growth in milk production, there's really no other animal protein sector that can claim to that, even close to that. So now all that milk production has grown. One of the big things that happened in the U.S. dairy industry is in 1995, the U.S. Dairy Export Council was created. And back in those days, we were a non-player in the U.S. or in the global dairy export scene, maybe exporting 2 to 3%, but we were bringing just as much in on specialty cheeses and those kind of things. So these days, every U.S. dairy cow is working about 5 to 6 days a month to produce milk for the export market. That's a big change. Roughly 16 to 18% in any given year of the milk production in the U.S. is processed into dairy products or dairy ingredients and exported to countries around the world. And our neighbors to the south are our biggest customer, Mexico, and became our first $1 billion market. So let's go back to cows because that's really what we're here to talk about. If we left the export market tomorrow morning as a country, we would only need 8 million cows. We probably need about 1.4-ish to serve that export market. And when you look at the overall dairy export scene, what is the growth trajectory for the United States? I think that's a natural question. It's a question that dairy farmers ask and when I'm out talking to people. Let's start with the big three. In this order, the big three are New Zealand, and they have 6 million people and 6 million cows, and they export nearly all their milk production. Their number one customer is China. Second among the big three is the European Union, so the 27 countries that make up the EU plus Great Britain. And then number 3 would be the U.S. When looking at global dynamics, New Zealand really doesn't have the ability to grow a whole lot more. They're a two-island nation. I mean, they have smaller islands, but the cows are really on 2 islands. And the European Union, politically speaking right now, I think everybody that's listening here has heard some form of protest coming out of the European Union in terms of climate mitigation and those kind of things. So what does that mean? The U.S. in its dairy industry is poised for growth.
So do you see, or would you anticipate, and this will require maybe some speculation, but New Zealand is capped, let's say, relatively in terms of their so the large upside would be if they could become more efficient and productive within that existing herd. Do you anticipate the EU seeing herd size declining over time, or are we looking at a stable herd over the long term?
So, it was interesting last year at the 99th USDA Ag Outlook in Arlington, Virginia, the ag minister for Poland, who is also the EU ag commissioner, you really got to look at Europe 2 different ways. Eastern Europe is still evolving all their different agricultural platforms, especially dairy. It was hindered by the old Soviet bloc. So countries like Poland and Czechoslovakia and even Ukraine, that's under war conditions right now, are really have a lot of upside growth. But then you have the established dairy countries like Germany, in particular the Netherlands and Ireland. If the politicians follow through with what they're saying on climate mitigation, there could be a lot less dairy cows in the Netherlands and Ireland. And so will that play out? Probably some form of it. I don't think as drastically as it's on the table right now. The thing that the European Union will probably do very well is hone in on higher value products, specialty cheese. They are pretty advanced in isolating whey proteins. And so they are poised to potentially capture high value sales. And that's where the U.S. needs to grow. And we are, but I would say it's fair to say Europe's a little advanced in that area than we are.
That's interesting. So if we think about then, if supply becomes constrained in one of the big three, let's make the assumption for the moment that the climate mitigation campaigns actually do result in herd decline. Again, New Zealand staying flat. Are there other potential markets or other economies that could contribute to that supply replacement, competing with the United States? Clearly, the United States would have the capacity or have the ability to expand the amount of supply to the market to meet any offsetting decline overseas. But would we anticipate a competitive response from India, from China, from other places that may have adequate land and perhaps conditions to actually be able to produce at scale and contribute to the export market? Or is it really the U.S.'s opportunity alone?
Oh, there's going to be competition. That's what makes the world go and markets move, of course. But a couple of countries, we talked about the big three. Certainly Argentina down in Latin America has a dynamic dairy market. Brazil could make some movement as well. Australia has actually backed off on milk production, largely because of water and economic conditions, but they previously certainly had a really dynamic dairy industry and still do. So those could be some three that come to mind. A lot of people do talk about India. India is poised to surpass China in population. India is the largest producer of milk in the world, more than the United States. But I always want to point out the thing about India. Half of that milk never hits a pasteurizer. Half of that milk never hits a cooler. So by the standards of international trade, that milk is essentially unsaleable. Is it consumed within country? Absolutely. But India, in my professional lifetime, has a long way to go to become exporter of record in the dairy space.
And what is, roughly speaking, if you know these numbers, how much of U.S. dairy export actually is meeting Indian demand? Or is India largely able to meet its own domestic demand?
India takes care of its domestic market here. Okay. They also, as a country with rather high tariffs, so even if you could sell product there, it's almost economically disadvantaged to take something to port there. So for dairy, they're on their own, really, at this point.
Interesting. So we're recording this in very early part of February 2024, and I was reading a report that you issued either in January this year or December of last year, and kind of talking about the relative strength and growth of the dairy category, but that exports were a wild card. And so since we're talking about this, I want to dig into it maybe a little bit more. I'm going to read just one of the statistics that you cited in that report, and it said on the international market, U.S. dairy exports in 2023 fell to 16.5% after posting back-to-back record years in 21 and 22, where exports represented 18 to 19% of total U.S. milk production. So very significant amount of production, or sort of ratio of export. And of course, then backed off to 16.5. Then you want to say, however, exports remain much stronger than the static 15% figure posted from 2013 to 2020. So, I guess a couple of questions here, Corey, is we're coming out of a period of significant economic dislocation and disruption. I'm guessing the pandemic had something to do with the pop in export figures, but maybe you can help us understand why did it go from a 15% stable, steady state export number to something approaching 20% for a couple of years? And then conversely, what's contributing to it reversing itself in 23 and backing off and looking like it may revert to the mean?
One word, China. Now, that doesn't make for a great podcast, but we'll expound on it. You cited a lot of numbers here. One thing I want to remind the audience, those export percentages are based on U.S. milk production. So essentially every year since 1995, when we as a country formed the U.S. Dairy Export Council and decided to get work in the export space, we grow milk production every year. So those percentages have been growing while we're making more milk. Now, let's talk China. China is the world's largest dairy product importer. Roughly, they buy 20% of the export dairy products traded in the world. New Zealand is the largest supplier. They're a big customer for the U.S. also in dairy. They're in the top 5. However, Mexico's number 1. Southeast Asia is number 2, and there's trade across the border between the U.S. and Canada. It's more of products going up than coming back manufactured. So we're just going to move Canada to the side. But again, Mexico, Southeast Asia, and then China. What's happening in China? Their economy is not doing well. I previously, when I was on the staff of Hordes Dairyman, led an effort to launch our 4th language magazine, Hordes Dairyman China there, and had been going there twice a year to speak in different parts and haven't been back since COVID. Their dairy industry is growing, but it's not growing fast enough to supply their dairy product needs. So China's backed off. In 2017, their economy was about 64% of the gross domestic product of the United States. In 2021, it grew to 75%. So, China as a country was a growing economy, but now their GDP is backed off to 2017 levels. Well, China's young people are saving their money a little bit more. They're making fewer purchases, and it's just made hiccups on a lot of imports, and that's impacted dairy as well.
Interesting.
Mexico has grown their exports to the highest level ever for the U.S., and they're probably approaching 1.4 billion. So that's been a big growth category.
So Mexico's been growing their imports of U.S. dairy product and milk,
correct.
Is what you're saying. Yep. As we think about relative U.S. competitiveness on a comparative basis to other major milk-producing economies, what other sort of, so briefly going through here, we've got the, a bearish factor of slower Chinese economic growth or even contraction. And obviously they've got a significant supplier right in their own backyard in the form of New Zealand, relatively in their backyard. You have bullish factors like Mexican growth, Mexico looking to absorb more of our exports, the EU potentially shrinking herd size, which could create opportunity, et cetera. But beyond some of those factors, what else are you looking at when you think about U.S. competitiveness and the bear or bull case for what exports might look like over the next several years?
Mm-hmm. We're going to talk 2 things here. One is what processors are thinking about the U.S. market. 2 big numbers here. I just came back from the International Dairy Foods Association meeting in their dairy forum. And between that and information that we know at CoBank, there is going to be about $7 billion with a B dollars in plant investment. So dairy processing plant updates and greenfield construction here through 2026, 2027 in the United States. A lot of that's cheese. Some of that's whey protein and others. There'll be some butter plant expansions here. That is a very bullish number. Some of those expansions are taking place in the Southwest, so think Texas Panhandle region. There's some major investment going in Western New York, and certainly in the upper Midwest and the I-29 corridor, and then as well out in the Pacific Northwest, Idaho and California. So that's a big factor. In the counting this year, between now and 2026, there's projected to be 520,000 metric tons of new cheese coming online. That's double the growth the last 4 years. So that is a very, very bullish factor. The other thing here, the United States is the world leader in dairy cattle genetics. There are other places that are very competitive, but there's no doubt the U.S. is the world leader. And our research and our work on genomics and genomic predictions in dairy cattle has just propelled genetic gain on cows. We're averaging about $83 of gain each year by using better bulls. And that's driven by genomics and genomic predictions and that whole science space. So two big things, processing plants and genomics, which are going to boost productivity.
Poorly executed mergers and acquisitions destroy more value than they create. They can set your company back years. To defend your firm's position in the marketplace, you need access to the leading practices that unlock the greater potential of your people, processes, and systems. If you are undertaking a company transformation or pursuing an acquisition as a vehicle to grow, set up a call with Joe by visiting www.moshercg.com.
That's fascinating. We're gonna come back a little bit later here and talk about what does that mean for other ag value chain operators, right? That either supply into or work with these processors. But 520,000 metric tons of new cheese production on an annual basis, that is massive. What sort of ratio are we looking at of that being domestic versus export market driven?
So quite a bit of that's going to be in the cheddar category, American style cheeses. And that'll actually be the biggest growth category. And then certainly the category that propelled cheese growth in the country, pizza, and the staple ingredient in pizza is mozzarella. So those will be the two big growth categories. However, there's one area that you really got to think about too, and it's demographic driven here domestically, is Hispanic style cheeses are growing as well. So we've seen over 300% growth in Hispanic style cheeses in the last 25 years, and that's going to keep growing as well.
300% in 25 years.
Mm-hmm. Now, on a small number, whenever I say percentages on that areas, I always think as an economist, you got to point out we were at a third of a pound a year consumption per capita in the U.S., and now we're over a pound. But that's a big movement. And if you look at the demographic makeup in the United States, that trend's only going to grow.
Absolutely. So I'm going to reveal my ignorance or just claim and disclose my ignorance here. But it's something I think we do need to talk about is the dairy on beef or beef on dairy, rather. I've already revealed my ignorance here. So maybe talk us through what that is and why people should be paying attention to it.
So that is a big area of discussion and a dynamic shift in the dairy industry here. And I have a research paper that's called Dairy Replacements Become a Muffler on Milk. And it's driven partially because of the beef on dairy movement. It's happened, and it's happened quick. So the first driver was it costs quite a bit of money to raise a dairy replacement. So a decade ago, you're talking about maybe $1,300 based on University of Wisconsin and Penn State research, and that number has gone to over $2,000 per head. As these costs have gone up to raise a baby calf to a cow, the values didn't keep up. People could buy them for $1,400 to $1,500. So, it doesn't take long to figure out if I'm losing $500-600 raising a heifer. Do I need them all? How many do I need? Let's right size this. And that's really when the beef semen on dairy cows and sometimes heifers movement came about. But I back up. It's really part of a triple play. So first came sex semen, which was commercialized in 2013, took off really a decade later. In 2022, 49% of the semen sold to dairy farmers in the U.S. was sex-sorted semen to make heifer calves. Number two was genomics, which came out in 2008. So now you could take your heifer calves, run a test within 30 days of birth, and know 70% of that calf's ability is a cow. So then I can get rid of the duds and send them on to career 2, which is beef. And then, well, let's make some beef on dairy crosses that mature faster, can be harvested sooner, and have a little bit higher yield. So coming back to your original question, Joe, how fast did this come about? Looking at data from the National Association of Animal Breeders, in 2017, we were at about 2.5 million units of beef semen sold in the United States. That has catapulted to 9 million units in 2022, and almost all of that is being used in the dairy space because cattlemen and cattlewomen are not going out and get their cows on Western ranches and using them AI. That's all natural service. So right now in 2022, 7% of all the fed slaughter in the U.S. has been from a dairy dam from a beef bull, so beef on dairy cross. That number is projected by CattleFax to grow to 15% here by 2026. Now, one last statistic in this space, Dale Warner from Texas Tech University, who I just talked in the last few days, projects that there's now between 3 and 3.25 million head of these beef on dairy cross animals out there. This was almost non-existent in 2017.
Amazing.
It's a paradigm shift. It's seismic.
Does that risk then ultimately cannibalizing the size of the U.S. dairy herd over time?
It's concerning. So data just came out January 31st. USDA issues this report twice a year. It's from cattle, published by the National Agricultural Statistics Service. We are now at the lowest level of dairy replacements, 500 pounds and over, in the past 20 years. Lowest number in the past 20 years. But near term, just think about it. We've dropped 709,000 head. That's a tremendous shift in the market. And as that's taken place here in the last year, replacement values have moved a lot higher. They're up almost to 1,900, where a year and a half ago you could have bought anything you wanted for 1,400 to 1,500. It's something to monitor. On the opposite end of the spectrum, though, cow longevity is improved, so we can absorb some of that. And the other thing is that any nutritionist or dairyman or dairywoman will also know when you get a cow in the 3rd or 4th lactation, she makes more milk than a first lactation cow. So there's a lot of moving parts to this.
Yeah, you're really proving true your opening statement that the dairy market is dynamic and changing. It's actually what I'm struggling with here, and I'll just say this out loud, is trying to find the through line because there's so many competing data points, established trends, emerging trends, speculation on what could happen that could either cause you to get very, very bullish on the sector or become very, very cautious.
I will try to knit this together a little bit, Joe. One thing that has been a fact through most of the U.S. dairy industry history, if there are incentives and economic indicators out there, dairy farmers will make more milk. Now, we are coming through a period that I would say dairy farmers are more cautious than they've been in generations because we had base excess programs among some of the processors. So, and a lot of those came about during COVID as we had all kinds of supply chain issues. However, as we move into the next couple of years, there are some, with the processing plants coming online and those kind of things, it's a little bit of if you build it, will they come? And the answer is yes. So there's been pent-up interest from some dairy farmers in regions to grow and expand. So you can change that heifer replacement supply pretty quickly. I mean, you still have Mother Nature to deal with over a 2 to 3 year window. But with sex semen today, this is different than my dad's dairy farming where you just had to let nature take its course. Here we could make a lot of dairy animals if we had to. I'm bullish. I'm long-term bullish, but there's some cautious things that you just got to bring up because you never know how things break, right? Or move. I don't want to say break as in breaking, but move.
And as you said, too, I mean, the market, and the market in this case being, the dairy farmer, they're going to respond to price signals. they're going to respond to opportunity. And if even if the herd runs thin, runs low, runs below where it needs to be, the capacity to replace and reestablish equilibrium is there. So I'd like to shift now. So related to the dairy industry, but if we look outside of it, within the wider ag value chain, this show is really for the operators of small and middle market ag value chain, ag supply chain, and food manufacturing companies, and primarily around trying to help folks expand their thinking and enrich their ability to execute strategy. And an important part of executing strategy is reconciling all those capabilities and results that you want to create with the environment in which you're operating, which is one of the reasons I love having you guys on from the Knowledge Exchange, because you provide such a different and robust perspective on the environment in which the companies are operating. So I think it's important that we also draw out what are the strategic implications for all the owners and the investors and the operators along the food and ag value chain. And so on the back of this breakdown analysis you gave us of the sector overall, what might be some of the risks or opportunities that different market participants should be focusing on? And when I say market participants, we can take a lot of directions, but in my mind, I'm thinking about, of course, the farmers that are producing feed into dairies, the grain originators and the stores and the haulers, et cetera, that are supplying those facilities, people that manufacture feed, and of course the dairy product manufacturers, which you talked a lot about the capacity expansion, but cheese manufacturers, butter, yogurt, et cetera. So what are the things, as you tie this together, that you think the individuals along that value chain should also be thinking about as they invest in their business or as they think about trying to manage potential risks?
I come back to one of our opening statements that dairy is a $64 billion category. And if you're that size and scope, so we have 9 million cows, but a dairy cow is producing something every day. In the U.S., we generally harvest one corn crop. We generally harvest one soybean crop. You harvest one steer. But dairy is going every day. So when you think of this supply chain, dairy has got the largest refrigerated system in the United States. It's among one of the largest, if not the largest, fleets for trucking, because you're moving milk to the processing plant, you're moving product to the consumer, and then you have all this feed moving around. So you have that going into it. Dairy is a tremendous economic engine. I think looking at all those that work in the dairy space, we have to remember the dairy cow is the most studied domestic animal on the planet. We're getting these data points from genomics. 23 years ago, my wife's family was the first in the U.S. to put robots in to milk cows. We've been collecting all kinds of data, and we're just figuring out how to harness it. A company like John Deere and DeLaval are working together on dairy data. John Deere more so from the nitrogen standpoint, and then DeLaval with their robot data, what that can mean. It'll impact measurements on carbon footprints and methane and sustainability. The other thing, we have to remember the dairy cow and her rumen is one of the greatest recyclers on the planet. Dairy cows and the people that feed them and the feeding companies that work with dairy farmers, well over a third and sometimes a half of these rations of the concentrates are things that never make the human food chain. I've been at places that there's candy, there's biscuits, there's jelly. You get to California, almond hulls and tomatoes, pomace, and all these other things. We can put in a total mixed ration. So I think as an industry and everyone that works in the dairy space, we have to challenge ourselves. If sustainability is a concern and climate change is a concern, how can the dairy cow deliver? How can the dairy cow take those things that some of which went into a landfill, and she converts them into the most complete amino acid known to humanity? We can use our imaginations to do a lot for humanity here. But there's going to be some places where we win and places that we don't do as well. But when it comes to grain handlers and feed manufacturers, how can we take what maybe somebody would deem a waste product and make it into put it in a value chain for dairy cow. How can we get carbon credits for that? How can we get, make it a win? Those are big things, and then in California, we have the movement on the compressed natural gas. And right now, roughly 20% of the U.S. dairy cows are supporting methane digesters. It's a source of revenue. Over 20% of the greenhouse gas reduction in the state of California, that has 10% of the U.S. population, is from dairy right now. So these are some things. How do we take different people that are working in different spaces, bring them together and have more collaboration? That's really a big picture question.
Yeah, absolutely. Even just posing the idea of food or feed waste, let's call them co-products because they actually have value here. They're not byproducts that would otherwise never go into a human consumptive market, may otherwise be landfill bound. And how do you facilitate those discussions to identify where they might actually be able to re-enter the value chain in terms of a ration into a feed compound? Now, I imagine there are some restrictions, of course, on what you can be feeding the animals due to the resulting quality of the product. But I think you're absolutely right that this is an opportunity to connect folks that are generating what traditionally are waste or byproduct and connect them with people who might be able to repurpose those into an actual value-added co-product or some kind of residual value in it. Great conversation today. Anything else that you think that we need to highlight, particularly, again, to those folks that are listening that are operating within the ag value chain, but perhaps adjacent to upstream or downstream of the dairies?
Certainly an impact if you're feeding dairy cows or beef cattle. Biodiesel and the demand from California in the aviation fuel markets is something we all have to watch. If the projections hold true, by 2027, we could double biodiesel production, and most of that's coming from crushing soybeans to extract the oil. Well, now the byproduct there is going to be soybean meal, very high protein feed, and that's going to have to find a home. We could export some. I think a lot of people are asking how can we use that in the domestic value chain. If I'm running anything in the nutrition space or feeding or grain handlers or feed manufacturers, that is going to be as seismic a shift as beef on dairy has become, which we talked about before. So I leave that out there that if I'm working in that space on a daily basis, I need to focus some attention on there and see how that's going to change my business over time.
Well, it's certainly going to have, it would appear to have, as just the pure economics around the crush complex change, where you used to crush for the meal, and then you found a home for the oil, and we're now entering a world where certainly the significant expansion investment in new crush capacity and refining capacity across the U.S. is largely, if not exclusively, driven by the biodiesel and SAF opportunity, and where suddenly you're crushing for the oil and then trying to find a home for the meal.
Flipped upside down.
Absolutely. Upside down, inside out, backwards and forwards. But it's I think obviously it's going to have a downward pressure on the meal price just via the volume, unless consumption and demand from other areas can rise with the supply. But would you anticipate that a downward pressure on meal prices and meal in terms of its ratio of the overall feed ration, is that going to flow through and result in more competitive, better margins for the dairies, for the dairy product manufacturers, et cetera? Is that a fair assumption, or is that overly simplistic?
I think the fair answer is yes. I don't think it's overly simplistic, and let's just get to the nitty-gritty here. The signature program in the Farm Bill for dairy is the Dairy Margin Coverage Program, and in its principal areas that it tracks are corn price per bushel, premium alfalfa hay, and soybean meal. So that says everything to what it means to dairy and where it can fit in as this entire situation evolves.
Yeah, fascinating. Well, Corey, we could probably go on for another hour or so, but I know that we both do have stuff we're running up against, but I want to say just a great overview and a great outlook on the dairy sector. Good discussion of what this means for companies along the ag value chain. And I want to use this as a moment to encourage listeners to really think about CoBank's knowledge exchange. If you go out, we had the benefit of having Tanner Emke on last year. Corey, you're joining us this year. These episodes are great and have a lot of good perspectives and good background and experience and insights that help people think differently or think bigger and more expansively about the marketplace. But the knowledge exchange is such a rich resource of reporting and analysis and commentary and points of view to help cut through all the, just of the dairy story, all the different competing bearish and bullish factors, headlines that are running smack into each other, and you sometimes have a hard time knowing what to make of it. The knowledge exchange just produces a ton of content, a lot of great information, and I just would really encourage people to think about that, bookmark it, visit it often, do whatever you can to make sure that you're having access to these reports that are, while they're incredibly comprehensive, credible, rich analysis, they're also digestible. Right? They're written for those of us who are not economists, who are not looking at these things every day, but need to kind of get what are the salient points, what are the through lines, what do we need to know and do as a result. And so just wanted to make that plug for CoBank's Knowledge Exchange because it is such an amazing resource. And as I talk with people, sometimes I feel like it's perhaps underutilized by those of us in the industry.
Well, thank you, Joe. We have an incredible research editor there, Christina Pope, that ensures that all our reports are relatable to everybody in the industry. And I'm new to CoBank. I've been here just 6 months, previously on the editorial team of Ford's Dairyman for 28 years. If you are looking for the Knowledge Exchange reports, it's so simple. You just Google CoBank, CoBank, Knowledge Exchange, and it pops right up, and you'll find those reports. You can sign up for them. I have 3 of them here that have been written since November. The butterfat boom has just begun. Milk composition is certainly changing. Dairy cattle genomics is quietly improving sustainability. And then one that I'll be posting real soon, dairy replacements may become the new muffler on milk. So some really good charts with them and analysis.
That's fantastic. Thanks for highlighting those. And thanks to everybody at CoBank for also not burying them behind a paywall. So again, it's a real service to the industry. So for folks that want to follow your work specifically or want to get in touch with you directly, how might they do that, Corey? Mm-hmm.
I am extremely active on LinkedIn. So you just look up Corey Geiger, Corey, Geiger, Geiger. I post links to my reports there. And if you have a specific question, I'm a 2-time book author. I'm very approachable. My email is cgeiger@cobank.com. That's CGEIGER@cobank.com.
Fantastic. You've been tremendously generous with your time. I really appreciate it. And thank you again for joining us and being part of the Pacesetter Pod today, Corey.
Joe, it's been a pleasure and a great conversation.
And to all of our listeners, thank you as well for tuning in. A reminder to like and subscribe to the Pacesetter Pod on Apple Podcasts, Spotify, or YouTube, or wherever you get your podcasts. And I encourage you to connect with me, Joe Mosher, on LinkedIn, or set up a call directly by visiting Mosher Consulting Group online at moshercg.com. That's all we have for today. Thank you for listening and have a safe day.
This is the podcastfactory.com.